Today, in our second segment, we have Jeremy Radcliffe with SWBC Mortgage back with us again today. Jeremy, welcome.
Thanks, Jeff.
Glad you're here.
You bet. Yeah, thanks.
It's good to see you.
Great to be here.
So we wanted to kind of get together again today, and gosh, have you been busy over the last couple of days?
Yeah, it's been a little bit insane the last week or so. We're staying very busy, that's for sure.
So what? I know this wasn't on our agenda, but how does that Fed rate cut? It doesn't really directly affect what happens to you, but how does that all tie together?
Yeah, there's a little bit of confusion on when the Fed cuts rates, what's exactly happening. And if you think about it, the Fed rate cut is really how it's a monetary policy in terms of what's going on between banks. So you'll see credit card charges get lower. You'll see even your interest savings on your bank account will get a little bit lower, but that does have an indirect effect in terms of how interest rates are pricing out. And probably a lot of your listeners have already heard about what's going on with interest rates. It's been really interesting. Mm-hmm. So rates are down. They're down even from where we were 12 months ago. It's just kind of crazy. It's a unique. I thought we were about as low as we'd see, and we're still down. So
well, I'm almost ready to call you and say, so how much are you going to pay me to borrow money?
Well, it's funny you say that. I was just talking with someone today. I was like, they were asking how long, should we do something now? I was like, man, I don't know how much lower they could go. I mean, we're in some cases. Every client's a little bit different, but we're at all-time lows, I would think.
It's just amazing. And it's a wonderful opportunity for people that are considering buying a home, changing from that rent to being an actual homeowner. Right. And that was kind of where we wanted to focus today is what are some of the ways that you talk to, what are some of the things that you would want to tell somebody if they were considering this?
So I think the first thing that comes to my mind is it's opening up some possibilities for people who maybe weren't comfortable with where interest rates were even 24 months ago. We had, after the elections of 2016, rates really started to go up. Everyone thought the environment was rates are going to continue to go up. I think it put some people on the sidelines in terms of wanting to buy, made people feel a little bit nervous about it. Now, I think we're starting to see people be like, wow, this really is a great window and who knows how long the window is going to be here, but it's a great window of opportunity to explore homeownership. Especially, I've had clients who, like first-time homebuyers, are really interested because they're seeing the news. I think it's a great opportunity. The way loan programs can be adjusted now for clients, depending on your situation, mortgage insurance isn't as expensive as it was even a few years ago. So there's a lot of ways to get into home ownership. And I think what I try to stress to clients is don't miss the opportunity of that appreciation where values of homes continue to appreciate. Once you own it, you get to lock in that value appreciation. We were talking about that the other day. I don't know exactly what the market's doing, but being able to have your name on a piece of property now, as opposed to at record low interest rates, is a really significant. I think it's a significant strategy for wealth. So I'm trying to pull this number off the top of my head, but like homeowners have 41% more wealth. Correct. Yes, I wish I had it with me.
Renters do.
Yes, it was. They were comparing the. I want to say it was like the equivalent of someone's. The word just left me, but basically their overall status in terms of income or assets, total net worth, I think is the word. And there was a drastic difference between people who owned a home versus those that did not. So
it's one of the things that is always interesting for me to hear is when somebody is kind of making this decision. One of the things that sometimes they think is, gosh, I don't want to deal with all those property taxes.
Right.
And, the truth is when they're renting, they're still dealing with property taxes. They're just paying them for
right,
somebody
they're paying
else.
It through their landlord.
Yes.
That's correct.
So
yep.
That's been a kind of a weird thing for me. But, you brought up a really good point when we were talking earlier, and it was about, what's the first step that some people make that they probably shouldn't, and it's not calling somebody that knows what they're talking about.
Yeah, the side story to this was I was talking with actually in the last couple of weeks I've talked to a few different individuals, and they said, you know what, I don't have 20% to put down, I'm not ready to buy, I know I either have to do 20% or I'm in an FHA loan. FHA is not a bad product, it's a great product for some people, but that's not necessarily the case. Mm-hmm. Their conventional mortgages would allow someone to put down, in some cases, as low as 3%. And what happens is, to that point, I see people talking to their friends sometimes who bought maybe 5-10 years ago, or maybe even to their parents who have not bought a home in a long time, and they're getting, in some cases, some really bad information. So my point was, make sure you talk to a lending professional, someone that can actually kind of walk you through some options that are more present day than maybe what happened a while back. So
well, and we had some clients that we sent to you a month or so ago, and one of the key factors for them was you pointed out that they could borrow from their 401k.
Correct. Yep. So I'm not a tax advisor, so always I recommend that you speak to your CPA. But there are some options in terms of being able to use assets from a 401k for the purpose of down payment. Those guys, if I'm not mistaken, were trying to retain a current home, so they've got some money set aside. We've talked about this before. So it kind of gives some leverage in terms of using assets in a 401k. You can do you can do a loan with your existing employer. So it allows them to use that for the purpose of down payment and not have to wait for their home to sell. So,
And it puts them in a much better position when it comes to, finding the home, negotiating the deal, the ease in moving. I mean, it just makes life so much easier.
Makes it so much easier. Yes, absolutely. That's a good point.
I was kind of looking over some of the bullet points that we were talking about earlier, and what else would you tell somebody that was buying there, that was considering buying today?
I think I mentioned in kind of that deal of getting right information, but I would say also we're talking with a client right now who is convinced that doing less than 20% down is a bad financial, and I'm trying to illustrate to him, like, hey, you know what? There are loan products now where you can do less than 20%. In some cases, you can avoid mortgage insurance as a whole. And maybe take a little bit of higher rate, but the trade-off on that is your payment doesn't change as much. So there's just several ways to look at that. And so I would say, before you are just kind of convinced that you've got to do the 20% down or something, I'd say talk to a lending professional, because there are ways that we can structure loans now where you can get in as low as, in conventional, in some cases, 3%. So it's kind of an amazing environment for that. So
it is not quite back to where it was, like where I thought it was, like in 2004 and 5, where if you just had a heartbeat.
No, it's not. We're not back to that kind of pre-housing. There's still, you still have to qualify, so we're not doing stated income or anything like that. But in terms of, I think the mortgage market's worked itself into where, let's get deals that make sense. And I'm really proud of where we are as an industry right now. I think we're presenting great options for clients. I think we're presenting great options for homeowners. And I'd say I'm proud to be a mortgage guy. I think
you're a good one.
Oh, thanks, Jeff. Thanks. I'm proud of what we do. I think the thing that I love is that we're getting to see people get into homes.
Yeah.
And I've seen that change people's lives. Seriously, like really make significant differences in their lives. So.
And again, it's kind of go back to the stats that I don't have memorized, but there are actually benchmark facts, that quantifiable facts, that show that it does improve people's lives from a family perspective, from a careers perspective, from just an overall health perspective.
Right.
Because there's the stability that comes along with home ownership.
Yeah, and the other thing we were talking about, I would say, in terms of people who have not bought a home before, I think one thing to consider is, I think there's some trepidation about, what if I put all my money into a down payment, or if I put, if I'm losing some liquidity, or I don't have that asset sitting in my bank account. I was talking to a friend the other day, and they said that was their concern of, like, gosh, I like seeing this money in my account. And I think there's always a trade-off. So the trade-off is, yes, you're getting that money in your account, but what is that money doing for you right now, as opposed to it potentially being in a property where you're getting the value of appreciation, assuming we're in a market that continues to appreciate. So.
Yeah, I was running some calculations for somebody the other day, and even if you were one of those people that bought a piece of property at the height of the market, say in 2005 or 2006, and then you saw your value decline during the Great Recession, now you are still in so much more positive position, because when we came out of the recession, housing values on average were down about 15% in our market, which is a really low amount, compared to other places in the country. But we had that 10% appreciation for 4.5 years there.
It was kind of insane for a little bit.
And that has slowed, which it really needed to. But, it's still, we'll say it's 5%.
Right. Well, even in a market correction, that's what I'd say, like, the trade-off, and I have a lot of friends who are still in renting, which I think is a great option. But if what I'd say is at least looking at what your options are in terms of what does a payment look like? Because all the friends I've spoken to, their rents continue to go up year over year, and they're not as happy with where they are. So,
And condos are really becoming
Yes.
kind of a more,
yes. Yeah, I'm excited about some of the stuff that Fannie Mae's done in terms of condos. They've loosened some of the guidelines in terms of what they allow us to lend on. Condos are treated a little bit differently, so we do a whole project approval as well. But condos are a great option. You know, I think my brother's actually looking at some condos right now. So there's some ways out there to kind of explore, hey, what do you do when maybe the house, maybe single family residence isn't in a space that I can afford or what I'm comfortable with? Condos are great, in my opinion.
they're, you know, for people that are they're not ready for the full homeownership experience or responsibility, I guess is a better way to put it. You know, condos and townhomes, I think, are a great avenue because you do pay your homeowners association fees.
Right.
A lot of people forget that the HOA is not this
Right, not-
third party out here. It is you. It is you and all the other owners. Yes, there might be a management company in there that also is going to get paid, but from a management perspective, it helps financially manage just your maintenance costs because you've got that one set fee that's fixed over here that you're going to pay every month. But if you get a roof leak, more than likely it's going to cover that. If somebody else gets a roof leak, yes, you're going to be covering part of that, but that shared expense really reduces.
And what some of the attraction I've heard about condos recently is having that community aspect too, as well. I think that's attractive to certain home buyers where they're like, hey, I don't necessarily want to live by myself in a neighborhood. I want to live closer with a group of other people. So, I think condos are a great option.
Yeah, so if there are any condos out there, single family homes that you are thinking about, this might be my next move, certainly give Jeremy a call. We'll have his contact information up there for you. And he is, you know, if you can't find his contact information, then you certainly reach out to us. We know how to find you.
Perfect. Yep. Happy to help out.
So, Jeremy, thank you for coming on.
Always
today.
a pleasure. I appreciate you guys letting me jump on, and I'm proud of your show. Y'all are doing great.
Thanks.
Yeah.
We enjoy it.
Yeah,
So again, if you need anything, give Jeremy a call, and we'll get you connected up and make sure that you get good guidance.
Yep. That was really great. And one of the first things that I ever did, I just started a watch party. So everybody that joined the watch party, thank you so much. And thanks for all your feedback. That was great. And I will try to figure out how to mute it the next time we do that. Whoops.
I wondered what that was in the background.
So it's still on. So let me turn that off because I just threw my camera. So anyway, all right. Thank y'all so much.
It was really nice to be back with you today. And just remember,
We want to be realtors for life.